Welcome back. Before we went on the break, Washington was telling us that the economy of Kenya was rebased in 2013, and because of this, the insurance penetration in the country was affected. Washington, are you back now?
Yeah, I can hear you.
Excellent. Could you explain how the rebasing affected the insurance penetration?
Well, what he meant by the rebasing was that previously, if you look at the GDP of the country, the rebasing simply means they take cognizance of services, the services industry, that's the tourism, the insurance sector, all the services industry, they take into account what they contribute to the economy and they factor it in. So when they factor it in, of course, the GDP is going to go up. And because insurance penetration is based according to the value of the GDP, then the GDP goes up. Of course, insurance penetration based on the GDP value then goes down. Because the figures do not change so much, so to speak. You know, that's what basically mean by rebasing. Because every time you rebase the economy, whatever values you are taking for the GDP is going to be affected by the higher
I understand,
GDP
sir,
value.
but the question still stands, which is the insurance penetration is still low. Whether it's at 3% or 2%, it's really still low. Won't the price increases affect the insurance penetration negatively further in an economy that is doing poorly?
Well, remember, there's a history I was telling you about the history of insurance. And as far as premiums are concerned, was that previously, the same figures we are talking about in 2014, actually, that's a proposal of 2009 before the petition came to the court in 2014. And then it was thrown out around 2016. Now, the figures, you remember, I talked about 7,500 being the price of third-party insurance, which some companies do maintain at, you know. Then we have now from the third-party rates, some companies now came down up to the figures of 4,000 shillings per year instead of 7,500. Motor comprehensive from 7.5 came down to 3%. And remember, when you come up with these figures, of course, there's a science that is used to come up with premiums. The premiums of the various products in the market. That's the actuarial science. Those are the figures that the industry uses, at least to make sure whatever they're trading in, there's a minimum, there's so much profit that can be made. Not supernormal profits. I mean, looking at the petition and the fact that it's being challenged in court, you'd think we are making supernormal profits in the insurance industry. As far as the motor insurance segment is concerned, we are making losses in terms of billions. What are people going to court for? They want insurance for free. What? I think that's kind of the question we should be asking. Because look at. I mean, and remember, in the insurance industry, if you open up an insurance company, you're not forced to trade in certain products. You can decide you'll do insurance, but you do motor insurance.
And I think that's a very good point, Washington. I don't know if you can hear me. I think that's a very good point. Why do you go for products that are, quote unquote, making you losses? And then now you are trying then to force the market to adjust to your bidding.
Well, the point is this. Remember, motor insurance is compulsory in this country. It's
Washington again. Washington, can you hear me? It's literally frozen.
Third party is something we are losing connection again, right? You can hear me? Sorry about that. I don't know. The network, the electricity thing is affecting everything. Now, What I was saying is that it is not a must an insurance company goes into motor insurance. But remember, sometimes you go into certain category of certain products so that you can be able to capture, for example, any other product from the same clients that you're doing motor insurance for. Can you hear me? So you can do motor because you want to go for other businesses like medical from the same client. You want to do a domestic package for the same client. You want to do personal accident for the same client. So you can't say that.
Bigger market, as it were, and then deepen it further with other products. And that makes sense. But then you've also said that the industry, the penetration was affected when we increased the size of the economy through rebasing. Rebasing simply means that there are segments of the economy that were not captured previously and are now being captured. Is it possible then that instead of increasing prices of motor vehicle premiums, or the industry can focus on these new segments and give them some creative and innovative products instead of perhaps going for price increases? Washington, are you there? I think we've lost him. All right. We may have lost Washington again because I wanted to understand why is it that the sector is unable to diversify their offering in the market and perhaps take advantage of the segments that are doing much better and offer them some innovative products. Washington, can you hear me now?
Yeah, I can hear you.
Yes, I had asked why instead of perhaps increasing the premiums, the industry is not considering the new sectors in the economy that were now included in the rebasing exercise, perhaps to offer them innovative products as opposed to increasing the prices of premiums.
Well, insurance, motor insurance is still remain motor. I don't know how more you can innovate on that. you still need third-party cover for your motor for your car as a minimum that you can get, you know. And as we speak right now, Ramogi, we are talking about a loss-making product, you know, a loss-making product that is compulsory in the insurance sector. I think if motor insurance is not compulsory, I think most companies just do away with it, you know, just do away with insuring, doing motor insurance. But now, since it is compulsory and maybe, like I told you earlier, insurance companies still want to do motor so that they can be able to capture any other business from the same client. I get that they're going for it. Well, innovation is there because actually, if you look at some insurance companies have really come up with very, very good motor insurance products. But the premiums still remain. I told you, premiums of 4,000 shillings, that party annual premiums is what making this industry have serious losses. Premiums from 4% worth of comprehensive covers is what's bringing problems in this industry right now. And like I told you earlier, it was tried out earlier, you know. I think it tried out earlier, actually over 10 years ago, in 2009. It's only that time, I think it was just a matter of technicality that it was IRA that was doing it instead of Association of Kenya Insurance, AKI. But this time around, it's AKI that is doing it. And I think it should pass because at the end of the day, these insurance companies are private corporations, not government entities. So they need to make some form of profit, so to speak. And I think that should be a strong point.
I hear you, sir. I hear you. Perhaps as we start to wrap up the conversation,
Yep.
How has the insurance industry responded to COVID-19 in a way that you'd say is both profitable to me as a shareholder and beneficial to me as a client?
Well, there's something that I think you have noticed that in the Q2 results from IRA, the response to insurance uptake was very, very fast.
Washington, are you there? Can you hear me? All right, I think.
No, you can almost call it fast. No, sorry about that. Let me you can hear me?
Yes, I can hear you. Please go ahead. You are telling me about the responses and the report from IRA.
Yeah,
All right, I think we'll have to go for a break, and then when we come back, we can wrap up the conversation with Washington and have a look at the currencies and how they performed in the day. We'll take a short break.